We've got Saman Habibi with us today, and Saman always brings us the heat with tons of stats, tons of numbers, and tons of insights. So Saman, what's going on in Durham Region?
When we take a look at active listings, there are 54 homes with a separate entrance and a second kitchen in the market right now, listed under $1 million. So as an investor, if you think that there's no hope, there are no properties out there, there are 54 plus 73 homes that you can take a look at to see if any of them fit your criteria. When I take a look at, what the investment strategy is right now, if you're solely caught up on numbers and also cash flow, the semi-detached properties are where it's at right now. Now that there's so much supply coming to market, I don't see how this is going to play out, how this is going to play out in the consumer's favor.
Welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host, and today we're here to see the October market update for the Durham region. We've got Saman Habibi with us today, and Saman always brings us the heat with tons of stats, tons of numbers, and tons of insights. So Saman, what's going on in Durham region?
Hey Adam, good to see you. Durham region has been, good, quiet, fairly flat in terms of the data, but today's presentation is going to be exciting because we've got we're going to dive into the numbers. We're going to talk about active listings. We've got a message for the buyers out there, the sellers out there, the investors, just trying to give everyone as much information as they need before the end of the year to prep everyone for the new year.
Yeah, looking forward to it. I know the stats as we showed them on our supercut were pretty flat, but you've got a lot more deep dive analytics that we can jump into, which is what I think we're all excited for when it comes to these longer form videos. So I'm looking forward to jumping right in. Let's do this.
Absolutely. Let's do it. So again, everyone, thank you for tuning in to another video. Today, we're going to be doing a market overview. We're going to talk about active listings. We talk about active listings and there's so many listings in the market, but what does that mean to our first time home buyers, to our buyers, sellers, investors? Out of all these active listings, what is really relevant to you? And that's what we're going to try and focus on. We'll take a look at some year-to-date numbers. How are we performing year-to-date? As I mentioned, we've got a message for all our buyers, all our sellers, investors. We're going to talk about pre-construction quickly because there's a lot surrounding the pre-construction market. We'll take a look at homes by type, investor data, and we'll talk briefly about the DR group and what we can do to help you out. So let's just jump right into these numbers. We're going to be taking a look at September to October and really figure out what's going on here. As Adam mentioned, numbers are fairly flat in terms of new listings. Our new listings are down approximately 10%, and that's just solely seasonality. We're coming closer to the winter months, towards Christmas, New Year's, and right now what's happening is that a lot of the listings that were in the market are being taken off the market, and because it's the winter months, people just don't really want to get into the market of selling right now, and we always see this around October, November. We see new listings come down. And as a result, average price has stayed fairly flat. We haven't seen a lot of movement when it comes to price, fairly flat. It's been, the story for the last couple of months. And when we talk about months of inventory, again, that number is very flat as well. Days on market, fairly consistent. Right now, it takes around 23 days or 3 to 4 weeks to sell the average home here in the Durham region. And our sales price to list price ratios is consistent at 100%. And what that means for the average consumer is that if you're on these websites looking at these listings and you're looking at the listed price, this ratio tells us that most of these homes are currently being listed at fair market value, and most are selling for approximately around asking price, which is good to know. You have to know this number because there's a lot of confusion around, is this home listed below market value, above market value? And this tells us that most homes right now are listed at market value.
Yeah, that's very helpful for people that are just jumping into the market. I know for the last few years that was super confusing. It was like, is this price that I'm seeing actually relevant? And that comes with a lot of actual critical takeaways, right? Because now you can actually tailor your search to exactly what your actual range is in terms of purchase price. And I find personally that that's a way better market condition to be in because it's predictable, right? And predictability gives us reliability, which helps us to stay closer to our goals.
Absolutely. There's, you know, we went from an area of, or a time of a lot of confusion about real estate prices. But, you know, I think that this market having corrected has also brought a lot of ease for buyers. Buyers know what they're getting into. You know, they have time to think. They know what prices are approximately around, and they've been flat, you know, for a couple of months now. So I'm finding that a lot of people are understanding the market a lot better now, which is good for the average consumer out there. Let's talk about active listings. I know we did this slide last month as well, and it was a really fun you know, slide to look into because there's a lot of active listings. But what do these active listings mean? So in the Durham region, as of right now, there's 1,766 active listings. Okay, so out of all these active listings, I've identified approximately 790 active listings under $1 million. And why is the $1 million mark important? Well, that's because first-time home buyers will be able to purchase these homes for less than 20% down. And these are all freehold homes, which I find a lot of first-time home buyers these are the type of homes that they're trying to get into, is the freehold, detached, two-story with a garage. So if you're a first-time home buyer, this message is for you. There are a lot of active listings out there that you can look at, and you can, you know, potentially go out, look at these properties and decide if you want to offer on these properties. Number two, there are 1,311 active listings under $1.5 million. So the reason why I have selected 1.5 as our threshold is because the new CMHC rules coming into effect January 15th of next year will allow first-time home buyers to purchase up to $1.5 million and still put under 20% down as a down payment, which is huge because, you know, this is going to create a lot of savings or less cash that you need upfront to enter the home. You know, you may argue that, well, you know, a $1.5 million home is not necessarily a first-time home buyer's house, and I'll probably agree with you. However, some people, you know, just can't find a home that can house themselves and their relatives. So or family members. We know that multi-generational living is very common these days, and often two families are coming to live in one home, which is why I think that this $1.5 million threshold has been brought into effect. So if you're in that scenario, there's 1,311 active listings that you can potentially look at to see if any of them are relevant to you. Now, let's talk about our investors. So typically, we know that when it comes to investment properties in the Durham region, a lot of investors have been looking at the duplex properties or homes with a separate entrance to take benefit or advantage of the second rental income that the property can produce. So when we take a look at active listings, there are 54 homes with a separate entrance and a second kitchen in the market right now, listed under $1 million. In contrast, there are 73 homes with a separate entrance, minimum 38-foot frontage, under $1 million, and 39 of these homes are priced under $800,000. Now, why is this important? This is important for anyone that's looking to do a legal duplex conversion, because these criteria will allow you to do that and find the right property. So as an investor, if you think that there's no hope, there are no properties out there, you know, there are 54 plus 73 homes that you can take a look at to see if any of them fit your criteria. And lastly, if you're a first-time home buyer and you don't necessarily want to get into a freehold home because of the maintenance, because of the, you know, the snow, the grass, you're just not into that. You just want to get into a condo, call it a day, you know, no additional work for you. There are 171 condominium apartment units out there under $600,000. Of course, there are some on the higher end, there are some on the lower end, but nonetheless, it's comforting to know that there are some options out there for you.
Yeah, it looks like there's a ton of options for people across the board here, whether you're coming into the market as a consumer and looking to buy your family home. And for investors there, I mean, that's a lot of listings that are under $1 million. And I think that's really the sweet spot when we're looking at the revenue that you'd be generating from these secondary units. And I always think about house hacking when I'm thinking about these types of numbers, because you can come in there, you can put down even 5%, right? And come in super low on your down payment and just get into the market. So this could be an opportunity for folks out there that are looking to house hack, and maybe you work in the city or you work close to the city and you're just looking for a way to sort of minimize your cost while also improving your net worth. And I think that's a fantastic strategy, right? Bring somebody in that can pay over $2,000 a month. You take the basement, you give them the nicer unit. You've got most of your cost of living covered right there. And, you know, coming from a financial independence perspective, that's one of the greatest opportunities you could take in terms of an investor journey. So I think that's really fantastic that you isolated those to show us. And 39 of them under 800 is really amazing, right? Like, because that's a lot of listings. That's a lot to choose from.
Yeah, exactly. There's a lot to choose from, and it's still probably the best way to get into the market because you just really minimize the amount of cash that you have to put up front, whether that be your down payment. Under 800,000, put less than 20% down. You're probably around $50,000 to $75,000 as a down payment, and your mortgage payments are probably going to be around $2,000 once you factor in the rental income, which is, you know, just in line or maybe even cheaper than renting a property.
Yeah, it's fantastic, and you're getting that principal pay down every month. You know, ideally, the market's appreciating over time as we hold the asset. These, you know, it's a win-win-win-win.
Yeah, principal resident exemption, get into the market, and you know you're getting into the market after a corrected, you know, real estate environment as well. So you're already ahead of people who bought in the peak by, you know, $150,000, $200,000, and you're going to be looking to build that equity up over time. So let's take a look at the 5 years of year-to-date data. So we're pretty much looking at data from January until October of 2024, and we're doing a comparison over the last 5 years from 2020 till 2025. As you can see, our new listings, as expected, are up. They're around 17,000. You know, compared to last year, we were at 14,000. So that's around a 17% increase year over year. And when we take a look at our sold data, last year, up at October of 2023, we had sold 7,478 units. And now this year, we've sold 7,891 units. So the utilization rate was higher last year. Last year, around 51% of listings got sold. And around this year, we're around 46. So there's less demand this year. And I think a lot of people are holding on from making that purchase because there's all this anticipation of rates going down. So the longer you delay that journey of buying your home, you're likely going to benefit from that interest rate coming down and you know, taking advantage of lower payments. I even have investor clients right now who are looking to purchase, but they want that closing date to be 90 to 120 days out so they can take advantage of the December rate cut and 2 rate cuts in the new year. Now, whether those rate cuts in 2025 actually happen or not, I don't know. No one really knows. We can speculate, but if we were to look at the probability of it happening, it's probably on the higher side that these rate cuts are going to happen versus not. So that's why I'm noticing a lot of my investors wanting to buy today to take advantage of the lower price, but push closings into the new year. And then the culprit has just been active listings. As you can see, active listings year over year from 2023 till now are up 45%. And because the supply is so high, average prices year over year are down by approximately 5%.
Yeah. And that makes perfect sense, right? Like we see just classic supply and demand situation here where there's a ton of supply on the market. Yeah. Again, we've received varying comments throughout the channel about whether this is a good thing or a bad thing. But I do believe that if you're on the buy side of things, having more options is always going to be better for you. And this scenario where there's a bunch of stuff sitting on market, there's going to be lots of opportunities to make offers that are advantageous to yourself. But you can see that there actually was still a fair bit of sales this year, right? So there's been a lot of sales, which again just tells me if you position your listing properly, like if you're an investor or a consumer trying to sell a property right now, the important thing is just to be putting in the effort to have it staged, to make it stand out in all of these listings, and to really put in, again, just that max effort on presentation, because houses are selling, right? Like you're up 6% year over year on solds. And so it's not like everything is just sitting there. It's just some people are probably still having unrealistic expectations. Then we've got seasonality. Then we've got rate cuts coming, which all comes together in this confluence of decision-making for people that are buying and selling. But for you, like really, I want to focus the person at home on what's inside your control, right? Like if you're selling right now, have a better listing, right? Get great photographer, get a great real estate agent like Saman, make sure that you're actually marketing the property properly. And then if you're on the buy side, just make more offers. I mean, that's really all it comes down to right now is get creative, make more offers, look for win-wins where maybe you could actually let go a little bit on the price consideration and go get some terms that you love, right? Or go the other way, right? Create the best terms possible for somebody that's been sitting on the market, and maybe they give you a price discount. This is where I would be approaching this from right now.
Absolutely. Yeah, I agree. The days of just putting your house on the market and just, waiting 2-3 days for it to sell are long over. I think this is where you have to, in fact, put in the most amount of effort to get your home sold. Like with us, when we do listings, even as far as doing cleaning of inside, outside, the windows, the gutters, we do all of that because we know that everyone is looking for a reason to bargain with you on price, and we want to give people zero opportunity to point out things and use as leverage to negotiate with us. So yeah, to your point, Adam, like if you're looking to sell your home right now, you have to make sure that you go all out and you have to stand out from the competition. Message to buyers out there. So if you're a buyer right now, or you're looking to become a buyer right now, as we mentioned while talking about active listings, there's lots of inventory. This is a great time to be selective. You can look for exactly what you want. If you got 10 things on your bucket list, you could perhaps hit 8, 9, and that's perfect. You always have to compromise on 1 or 2 things, but because there are so many options, you can be selective. And you also want to be prepared, okay? So you want to make sure that you have your finances in order, you have a realtor that you're working with, and just make sure that you're ready to go, because these opportunities do come and good opportunities are out there. And when they're out there, you want to be able to jump on these opportunities. As a buyer right now, these are the clauses that are currently being accepted by sellers. So the finance clause, the inspection clause, and even the sale of buyer's property, depending on what you're buying. There are a lot of scenarios right now where people don't know if their house is going to sell once they make that purchase, or they're looking for such a specific home that they have to purchase first and then sell their existing home. So in these scenarios, we've been going into the offer negotiation by negotiating a condition that allows the seller to the buyer to purchase the home and then go ahead and sell their existing property after. There's typically a time frame that's associated with that, but nevertheless, these are clauses that are being accepted right now. And you need to be aware of the new policy changes. So as of December 15th, the first-time home buyer is only able to go up to $1 million at a less than 20% down payment. After December 15th, that number, it changes and goes up to 1.5. So, if you take a look at this little table that I've created for you, you can go as high as $1.5 million, and your down payment would only be $125,000 versus prior to this, your 1.5 million would have had to take on a 20% down payment, which would have created a larger cash requirement needed to get into the market. Okay, even when you look at that incremental increase, pretty much as your price goes up, you're going up $10,000 per down payment. This is great. Again, if you don't have all the cash right now, you're able to take advantage of this less than 20% up to $1.5 million and really try and get into the market without having to break the bank or having as much cash up front.
Yeah, that's fantastic.
Yeah, this is going to help people quite a bit, especially if 2 families are coming together, to buy. You have, a newly married couple with their parents. You're going to be able to come up with the 125. You should be able to manage this and get into the market at the 1.5 to have a home that's going to house everyone, right? And interest rate cuts. As we know, the next interest rate announcement is December 11th, so keep an eye out for that. And once that news comes out, you can kind of start to hear what the rumble is for the new year. As I said earlier in the video, a lot of people are anticipating future cuts in the new year as well. So the December 11th announcement should start to give us a bit of a projection into what's going to happen in the new year. All right, so we spoke about buyers, and what about sellers? So if you're a seller and you're looking to sell in the new year, you need to have a plan, and you need to have a plan very fast. So first things first, connect with a realtor as soon as possible. We would like you to give us an opportunity to represent you. What we say is at least interview us, call us, bring us to your home, interview us, and go interview other agents as well, and then see who you're comfortable with. But connect with a realtor ASAP. Get your exterior pictures done now before the snow comes. We always do this in the fall because we want to make sure we have a really good understanding of what the property looks like, the front, the back, the bird's eye view with drone photos. So we can have these pictures available when there's snow on the ground. And, you know, this way you're ahead of the competition as well, because now you can show people what this property really looks like when there's no snow on the ground, and start that decluttering process. People have so much things in their home and we're all guilty of it. It takes up quite a bit of time. So start that process now. And lastly, anticipate an early spring market. Okay. So typically the spring market starts in February, March. This is when prices start to increase slowly. And historically, prices for the year usually max out around June, July. So you really want to make sure you get into the market around February, March to be, this is when you want to start to get on the market. And as you know, as the times progress, by June, July, prices are going to max out. And then if you've missed that market, you're likely going to be catching the downfall of the market. So be really prepared. If your plans are to go to market and sell in the new year, I would say you want to plan to be on the market between February and April, somewhere around that time period, so you can take advantage of that market increasing.
Yeah, those are fantastic insights. And I couldn't agree more with the idea of getting the photos before the snow. There is nothing worse than a low lighting, terrible photo of your property that's covered in snow and ice and everything else. And honestly, it's so much better to have those pictures done today. So I would really encourage that. And yeah, that decluttering process is a big deal. I mean, you're going to have walkthroughs through your property. You're going to have showings. You're going to have people, strangers coming through the house. And it seems simple, but honestly, like the emotional tie people have, even to just like the colors of paint that you have, like people have a really hard time seeing past sort of the soft things about the building. So I would really, really, really second that from Saman. Like people see the clutter, they see the crazy colors on the walls, they see anything on the property that's out of order. And all of a sudden they start thinking, I want a deal on this.
Yeah, exactly. Yeah, people are hunting for things to negotiate with you on. So
yeah,
start this process early and just be as prepared as possible. Okay. All right, guys. Trouble brewing in pre-construction. We know that there's a lot of noise around the pre-construction market. What I'm finding right now in the Durham region, pretty much consistent across the GTA. Buyers having difficulty closing, a lot of attempts to assign these contracts, and appraisals are not coming in at purchase price. Right now there are scenarios where it's cheaper to purchase these condominiums that builders are selling on the MLS than it is to purchase it through the builder. And you're always going to have builders and agents always arguing that there's a delayed closing date. You don't have to worry about the mortgage application now. There's going to be future appreciation on the property, so buy through the builders. You're the first buyer. To me, builders and agents, pre-construction agents, use these as benefits to buying pre-construction. But to me, none of these are benefits at all. There's just way too much risk in the market right now. A delayed closing means that you're pretty much closing your eyes and you're hoping that by the time you close, the market has stabilized. The delayed mortgage application, if you don't have your ducks in a row now, what makes you think in 2-3 years, as the market gets more volatile, you're going to have your ducks in a row in the future? And appreciation, you just don't want to depend. You never want to go into an investment strategy where you're depending on natural appreciation. We always preach forced appreciation. If natural appreciation comes, great, but you want to have forced appreciation, which is why when I see pre-con agents talking about these 3 features to get you into a pre-con project, it's just a red flag for me. So if you have a pre-con project coming up for close, take a look at your numbers, make sure you're able to close on these projects. If not, if you're looking on offloading these properties, you need to start that process early. As an intake, I'm in a private group that our office has, and there's probably 600 or so agents in it. And every day I'm seeing around 10 to 20 notes of assignment projects or condominiums looking to get assigned. And God knows what the utilization rate is on those assignments, but I assume they're not high. So if you got something coming up, start planning for it now.
Saman, that's actually like really interesting insight into this. I guess I would have predicted this, just kind of seeing the stats from the market in terms of there being a ton of supply on the market right now, in terms of there not being a ton of volume moving. I know we had that increase in sales year over year, but anytime I see there being a ton of inventory, I have the same concerns as you with things like delayed closing, the delayed mortgage app, and depreciation. And the thing people don't understand really, I think anyways, about getting into deals like this is let's just look at one of them, right? Delayed mortgage app. Okay. You delay your mortgage app. You're not ready today, but you think you're going to be ready sometime in the future. This pre-construction build, let's say it takes 1 to 3 years. And within that time, your car breaks down, right? And so you go buy a new car. You had to, right? It's the way that you get to work. And in that meantime, too, you have some sort of dental issue, right? You have some kind of issue that comes up in terms of maintenance on your existing building or something like that. And you're forced to spend some cash. All of a sudden, like your debt, like your utilization, your credit availability, your actual cash on hand can change really quickly with very small changes in your financial health, right? Like things like buying a car, things like, replacing your roof or something like that and putting that on credit. Like all of these things are going to affect your mortgage application. And it's so easy to find yourself in that situation. And I have seen it time and time again where buyers have just come to the closing table. They're right there. They're ready to go. They had this pre-approval from some point in the past, and they didn't realize that buying the car or the boat or whatever else was going to affect their credit to the point where they could no longer purchase that property. Yeah. And that's really dangerous. When it comes to the actual delayed closing, like I would way rather look at the inventory that's sitting on the market today and have more control, more leverage over the price and terms that I'm able to negotiate today on a for sure building than looking at something in the future that's burdened by huge contracts. Like these contracts are not nice either. A lot of these contracts will forward costs onto you if things go wrong in terms of the building or the development. And I really just have never understood how to make sense of it as a predictable investment strategy. Maybe as a consumer, you see a layout, you see a building, and you see a neighborhood that you love. But as an investor, I really don't understand the argument for any of these things to be positives. Appreciation, that's a maybe, right? Because we can predict like reasonably there should be some rate cuts, which reasonably should drive some demand, which reasonably should appreciate the market. But again, why not just look at an existing structure, force some appreciation, get that natural appreciation, and also take advantage of the leverage you have by being able to talk to the actual seller today about price and terms that make sense for you. I mean, it's just a no-brainer to me.
Yeah, you mentioned a few things, Adam. Maybe there's a floor plan that you like. Man, you look at some of these floor plans, and I don't know who would love these floor plans to make a decision based on it. These things are so small. And lastly, in terms of supply, right? So there's a lot of supply in the market right now, but in the city of Pickering, they're estimating somewhere around 52 actual like buildings, individual buildings being built in the next couple of years. Like,
wow,
this is a lot, guys. 52 times each of these apartment buildings have 200 or so units in them. Like they are, I don't know where these numbers are going to come from. I really hope that the data is correct and there is in fact this much demand, but just buying a condo just because, you think that it's going to appreciate and there's just so much immigration and so much demand. Well, there's like the pipe of units coming in is very large. So I don't know if you can really look at the appreciation and say, I'm going to forecast this out because there's a lot of supply coming.
Well, and it's worth noting that condos, at least in the GTA and Kitchener-Waterloo, London, Collingwood, anywhere that I'm super familiar with, condos are always the most volatile segment of the market. So you could wake up on Monday and it's a 20% delta on condo prices when the single family home maybe moved 4, 5, 6%. And so that to me makes that proposition actually relatively scary from a risk to reward perspective. Because like, yes, you could potentially benefit from the gain, right? It could potentially be that you're on the upswing that day, but it could also be that you come to closing, you actually don't get the appraisal for the purchase price. And now you're trying to scramble to either try and negotiate something or come up with cash. And nobody likes a cash call. I don't care who you are. I don't care what sort of money you've got. A cash call sucks. And so that's where I get really sketched out about this type of thing. And it's like we said, like there's so much inventory, right? Go pick something that's on the market. You can touch it today. You can predict what you could do with it today. You could run real numbers based on real measurements, real tangible building and envelope. and force appreciation. I've always been for that. I don't think today's the time where we really want to gamble on like the future when we don't have the building in front of us today.
Yeah, and I mean, if you're doing your analysis correctly, you're going to notice that even the resale condo in the same building that the builder is trying to sell doesn't cash flow.
Yeah.
So what makes you think it's going to cash flow in 3 years down the line? Unless you think that interest rates are going back to 1 to 2%. Maybe it does then, but I don't even think it cash flows at 1 to 2% with the maintenance fees that are associated with the buildings.
Well, and there's tax consequences now too to assigning these contracts. So like,
yeah, exactly. Yeah. Yeah.
You know, I really don't see the attraction anymore. I think that strategy is, if it's not dead, it's on the way to being dead. And honestly, I believe that's a good thing. So
I think so too. Yeah.
Yeah.
This should be, you know, if you want that condo living, this is what that's for. In terms of speculation, yeah, it to your point, it was very common, and you know, some people did really well when there wasn't enough supply. But now that there's so much supply coming to market, I don't see how this is going to play out. How this is going to play out in the consumer's favor. The builders, to your point, they're protected. They're passing on all the costs to the consumer, and they'll take you to court until they collect it, because you're in default if you don't close. But at the end of the day, someone's going to get hurt, and it's not the builder. And let's just quickly talk about the different types of homes and how they performed from Jan till October. As you mentioned, Adam, like the detached properties are pretty resilient. They're up 2%. Semi-detached properties are down 13%, which is a big hit. However, I look at that as an opportunity. So semi-detached properties are, they're, in my opinion, they're still nice because you're only sharing one wall, and typically that wall is a brick wall. So in terms of noise transfer, it's not crazy. They're down 13%, so they've been corrected from a valuation perspective. And when we talk about investment properties, I'll show you why I like these properties more right now as an investment property, because the numbers make sense. But semi-detached properties, 13% correction. Townhomes, a 2% correction. Linked homes, 1%. And condo apartments, they're up 5% right now. I know we just spent a lot of time talking about condominium apartment buildings, taking a big hit. That is true, but in the Durham region, we don't have right now a lot of these new condominium buildings that were that are built. So these numbers don't really reflect anything new. It's all the existing market. It's all the existing inventory. And these are older condos, built in early 2000s maybe. So that's why this number is not being reflected in what we just discussed. But once all this new inventory comes in, I would expect condominiums to take the bigger hit.
Yeah, it's also pretty natural to see the kind of whip effect. So like I've always found that when single family detached or even semis are up and they start getting very expensive, you'll start seeing the condo market come up as those classes fall. Yeah. Right. And so I've always kind of noticed there is a bit of delay on data from the top end of the spectrum, which is your detached, down to your condos, because people will essentially like discover an affordability problem, and then that trickles down through all of the data, but it takes time for the numbers to adjust at the different segments. And so you'll see once condos hit a certain point, like, it looks like maybe it was that 497 point, like now there is that 30K of room to grow up into. And it's like, that feels very natural to me. But again, like what you just pointed out, Saman, is like, you start introducing more inventory, or you start seeing the detached or even the semis coming down a decent amount like that. All of a sudden condos are going to dump again, because then all the condos start sitting as people transition into those higher asset classes. The problem with stats, and I love our market updates, but the problem with stats is always going to be that we're focusing on any one number at a time. And the reality is stats, for context purposes, need to be zoomed out on, right? And so it's just, if we looked at more data, if we looked at more time, we'd be able to see that relationship. But yeah, I appreciate you pointing that out for this slide.
And yeah, and I guess, we are in a rural area as well, where perhaps the demand is definitely more towards, freehold homes than condos. But I think as the millennial and Gen Z generation starts to come up in age, they might be interested in that condo apartment living, and perhaps maybe that's why condos are staying or are increasing at the moment. But again, once this new inventory comes in of the pre-construction properties, then we'll be able to see what really happens with those numbers.
Yeah. And honestly, that could make those attractive from a consumer perspective for sure.
Yeah.
Right. Because if that starts dropping from 520 down after like, that was a lot of units you're talking about. As those hit the market, I mean, for a consumer, the delta is so big there between, say, 500K up to $1 million, or 450 if it drops significantly up to that $1 million to get to that detached. There's gonna be a lot of people that look at that opportunity and say, yeah, I want to own, but I can't own a detached at this point.
I agree. Yeah. So for investors, we talk a lot about the legal 2 units, but recently I took a client to go see a semi-detached property that was a semi-detached with a legal lower unit. And the numbers to me, looked pretty well. So this particular property was listed around 720-ish, but I think it could have been purchased around 700 or maybe even 680. I ran my net numbers on 700K, 20% down, 4.9% interest, 30-year AM. And I think the upper unit can generate 2,200, the lower unit 1,800 bucks. And we were seeing a positive cash flow scenario of $315. And when we take a look at our 5-year return, I plugged in a 1% appreciation. I was seeing around 13%, which was really refreshing to see, because every time I ran my numbers on duplexes, most duplexes are in negative cash flow scenario. So if we take a look at the next slide, I've done my my analysis on a duplex. So when I looked at a duplex, I ran it on an 850K purchase price, which is the average purchase price right now, and that pretty much brings us to a minus $200 cash flow scenario. Versus the semi-detached property that I was just talking to you about is a swing, and it's cash flow positive by around $300. So, and that's assuming all our financing is the same, and rental rates are fairly conservative. So when I take a look at what the investment strategy is right now, if you're solely caught up on numbers and also cash flow, the semi-detached properties are where it's at right now. And as we just spoke about, these semi-detached properties have been corrected in price. So you're getting advantage of that lower purchase price, and there is room for price appreciation on these properties as well. So if you're cash flow focused, you don't want to be out of pocket, you might have to shift from a detached duplex property to a semi-detached. We know that this comes with a drawback. You don't have that larger lot to play with in terms of doing a some sort of future development, whether it be a garden suite, ADU. But what I'm finding is that the garden suite, the ADU, is a very interesting thing to discuss right now, to learn about, which is the right thing to do. Let's learn about all these things. But I'm finding a lot of investors are still having a hard time, one, finding a way to actually build these things, and two, looking at the ROI from an unlevered perspective. Like if you were able to leverage it, great, it makes a lot of sense. But if you're paying cash, I'm finding a lot of people are having a hard time really getting over that hump of, I'm going to pay 300-400K cash for this garden suite, and I'm going to generate 2,200-2,300 bucks. The detached properties are nice. They're good to have the ability to do something in the future. But if your numbers focus right now, then I think the semi-detached properties are where it's at the moment.
Yeah, I agree. You got to do the ADU under leverage for sure. That's just a no-brainer. What's really interesting here is the price difference that you're going to go from getting into that semi from the duplex, and you're only taking a $200 hit on your revenue. Personally, I think that's fantastic. I mean, your taxes are going to be cheaper. All your operating expenses are going to be cheaper. It actually, to me, is a really great strategy. And that's what I did with my first property. Actually, it was just a large semi that was able to have a basement, thing going on there. So I think that's really smart. And I want to point out too, when you're running these numbers, Saman being you are a CPA, correct?
Yeah.
Okay. Saman's a CPA. So that's why he's included really, really, really intelligently maintenance at 4%, vacancy at 3%. And then he's got that little placeholder there for 8% property management. I think this is really great. I've seen a lot of people, I've seen your Excel sheets. I've seen how you're running numbers. People run numbers by me all the time. You've always forgotten the maintenance and the vacancy. Guys, even a 1 month turnover is going to give you that vacancy and hit your numbers when you're looking at projections. So this is really smart. You're not losing that money necessarily. You're trying to bank this money. And so it's another way to look at it. Like you can either look at it like you're making $3,700 a year, or you're making more like $6,000 a year, but you're holding on to that stuff just in case, right? That's your furnace repairs, that's your roof, that's your tenant turnovers for cleanups and painting and all the regular maintenance that goes on. And it's really smart to budget that into your sheet. So thanks, Saman, for showing us that.
Yeah, and I always tell my investor clients they're non-cash items, so they don't go out unless there's an event that calls for it. So this is staying in your bank account, but I just tell people you should probably have like a sub account that you just transfer these funds into and just kind of consider it an expense and use it as an expense when it comes to doing your taxes as well.
Yeah, and it helps you to season the cash too. So when you guys are going to look at future purchases, having this money seasoned and just sitting around in accounts for longer periods of time is honestly quite useful when it comes to getting new mortgages. So
great. And as always, the DR Group, we spoke about this in the past, but give us a shout if you have any questions and you want to talk about your personal scenario. We're always available to take on a call with you, a virtual coffee. You can take out your phone, scan this QR code, and you'll be able to book a call with me and we can talk about your personal scenarios. I've been getting a lot of phone calls from people in the Durham region that want to go out and see properties. So it's working. People are actually doing this. So if you're interested, you've got some questions, you want to go see something, take out your phone, scan this code, and book a call with me, and we can figure out next steps.
Fantastic. Well, thank you so much, Saman. I've always appreciated your approach to our market update. Super data heavy, and I love that. I personally get a lot out of that, and I love seeing the insights into the segmented numbers. How many listings are there under 1 million? How many listings are there under 800? That was a fantastic addition to this week's presentation. So looking forward to having you back here next month. And if you guys aren't already subscribed, get down there because we do this every single month.